Interest rates are on the rise again, and the market has been showing signs of balancing. Buyers are leaving the market, and sellers, they're coming into it. So what does this mean about the value of your home? Hi, I'm Stephanie Oliver with eXp Realty. So what's happening here along the coast of Southern California? Everyone wants to know, are we seeing a housing bubble? Should I still consider buying? Is it still a seller's market? Let's look at the data of what's happening so that you can make an educated decision. First off, let's see what inventory levels are doing here locally. In Long Beach, California, at the time of this video, we have 405 total properties for sale, including townhomes, condos, multiplexes, and lofts, and 253 of those being single-family homes. Long Beach had 132 single-family homes close escrow in the month of July, which is less homes sold than what we have seen over the past several months. And we're over 100 homes higher in inventory than since that time. And we're seeing more homes coming on the market everywhere here. Now, higher than what we're used to, the average time to sell is still a very short duration of time at only 16 days. And certain zip codes in Long Beach, such as 90803, are seeing many homes sell for above the asking amounts. In July, however, 20 of the 81 homes that sold with a days on market of 2 weeks or less closed escrow for less than the seller's asking amount. This stat at 25% is more than double the amount of properties that had a days on market within 2 weeks time that closed below the asking amount in February, March, or April, which only averaged about 10 to 11% for those closed sales. Generally, on average, homes here are actually selling just right around the list price. As a matter of fact, we went from a list price to sales price ratio of 103.3% in January to 104.4% in March and to 105.4% in May, dipping to 101.5% in June and down to 100.3% in July. And this is the same story for the list to sales price ratio in all of the surrounding communities. So it seems that all of the elevated activity in every community here has balanced out. And keep in mind though, that this doesn't mean that homes have lost value by any means. We can say that many homes are still selling relatively quickly and above asking. Yet for much of the housing markets here and everywhere else, the asking amounts of sellers are having to be corrected from the sellers' overinflated desires of a market that has already peaked to one that is more in line with the repositioning market. Just a few months ago, even if you listed your house $50,000 over your neighbors that just sold, it was receiving multiple offers within a week. And that has now changed. Through no fault of your own or mine, economic changes have impacted buyers' purchasing power. So, expectations of sellers and asking amounts have had to come down, but not the value of the properties. Something else that is noticeable is that the active for sale properties have an average days of market of 38 days. Now, this is not what we have been saying over the past year, where we say homes flying off the shelf and selling for significantly more than list price, but that wasn't normal. The economic machine is slowing down, and these recent economic adjustments are beginning to normalize the market. So the inventory is climbing, and so are the interest rates. And that may make some buyers weary, but it also is giving many more buyers opportunities that they did not have over the past few years. And as the data shows, buyers are still buying. And it can be scary understanding the new changes happening and how they impact your real estate goals, as well as how to navigate this market. So please reach out to us at no cost or risk for a strategy session and to get your questions answered. Also, be sure to subscribe to my social channels on YouTube and Facebook at Stephanie Oliver Real Estate Services for updates and educational videos like these as they unfold. Again, I'm Stephanie, and this is how technology, strategies, and service can move you